Are you wondering if the Houston housing market is going to crash? We are definitely in a shifting market. We're shifting away from the craziness where every single house is getting multiple offers, going way above list price. Definitely shifting away from that, as right now we're still seeing some houses getting multiple offers, some houses sitting on the market, which seems like an eternity, and some houses dropping price because they're not selling. Those are indicators that we in fact are in a shifting market. Where we're going to land, now that is $1 million answer. And the information I'm going to provide in this video will show you why we potentially could see a correction of 10 to 30%. Now that would be a mini to a major crash typically, but because of the recent appreciation in value since COVID, that would impact a small portion of homeowners, the ones that bought since COVID started. And next week, I will drop a video why we could see a major market crash, which would be about 30 to 50% in home values dropping. And that would be a crash because it would impact people that bought prior to COVID and a much bigger pool of homeowners. So make sure you hit that subscribe button. That way you're notified when that video drops next week. My name's Dinko. I'm a licensed real estate agent and a licensed mortgage broker in the state of Texas. If you need to get a hold of me, my cell phone number will be down below in the description. Call or text me anytime. Interest rates are the leading reason why we are in a shifting market. So in December, when the Fed announced they were going to start increasing the Fed rate in March, interest rates already took that into account and interest rates started going up gradually. We were supposed to settle in the 5s. However, currently we are anywhere between 6 to 7% because interest rates change daily and they're not directly affected by the Fed rate. So interest rates are much higher than what they were supposed to be. We're supposed to settle into 5s. Now the talk says we're going to settle somewhere into 6s and maybe potentially into 7s. So that caught everybody off guard, and also how fast interest rates went up, that also caught everybody off guard. And I want to show y'all an article here by Northwest Bank. So what they did is they did a breakdown between 3 and 4% and how much a typical buyer loses in purchasing power. So a 1% increase in an interest rate is about 10%. It's slightly less, but it's about 10% that a buyer would lose in purchasing power. So they calculated principal and interest payment because that's all that's affected by the interest rate going up. Taxes and insurance, that's not going to be affected by the interest rate. So a $1,500 monthly payment for principal and interest at a 3% interest rate with 20% down, a buyer is able to buy a $445,000 house. Now, that same $1,500 monthly principal and interest payment with a 4%, so a 1% increase in the interest rate, is equivalent to buying a $392,000 house. So as we can see here, there is a $50,000 drop in purchasing power that a buyer had with a 1% increase. And we were supposed to settle into 5s, and now we're between 6 and 7 and going to settle somewhere into 6s and 7s. That is a huge increase and a lot of purchasing power that's being lost. Now, luckily Houston, we have lower price points, so that is going to affect the purchasing power a little bit less, but there is the insurance that's more expensive and all that stuff gets taken into account to the monthly payment, and that's why the purchasing power is being lost as well. So if we take a house that is higher in value, a $742,000 house with a principal and interest payment of $2,500 with a 1% increase from 3 to 4%, that same purchasing power is now $655,000. So it's almost a $100,000 loss on purchasing power with a 1% increase in the interest rate. Now, inflation is also at record highs in the last 40 years. From May of 2021 to May of 2022, inflation has gone up 8.6%, which made the Fed get more aggressive, and that actually helped interest rates because the Fed doesn't directly impact the mortgage rates. So banks look at inflation and say, well, inflation's under control. The money that they're lending is not going to be worth that in the future. So that's why interest rates started skyrocketing, because inflation isn't under control. So hopefully inflation can get under control so that these interest rates can start falling back, and hopefully we can maybe still settle somewhere in the 5s or at least around 6%. Now, the other thing that I want to show y'all here is how much of the market is considered overvalued. So the way this is broken down is average income, average house price, can the two support each other? So right now, according to Core Logic, and this is on Fortune.com, they consider 65% of the housing market overvalued. So everything here in red, they consider overvalued. Now Moody's, they consider 96% of the market overvalued. and they're kind of showing the ones that are slightly overvalued and more overvalued. Houston, luckily, is down here on the lower end. So Houston market is by 28% overvalued. So that's still quite a lot. That used to be Seattle and other markets. So what happens when these artificial interest rates made these home prices so high? Now the fact that interest rates are going up, what's going to happen? So that's definitely stuff to take into account. Now, Jerome Powell of the Fed, he's saying that a soft landing is going to be very challenging. So first, the talks were that a soft landing was going to be done, it was going to be possible. So that just means the economy wasn't going to get affected. Now, a soft landing is going to be challenging, and companies, especially tech companies, are now seeing this as a potential recession, and maybe a pretty decent recession. So they've done hiring freezes, and they've also started doing some layoffs. So if we do get unemployment rate going up, with the interest rates going up, with the markets being overvalued, those are things to kind of take into account. And it also got me to thinking, well, of course, there's the macro and micro stuff going on, and people are saying real estate is local. Well, the Ukraine war also isn't on our soil, and we don't really have anything to do with it, yet it's affecting us here. So if the market starts going down in other places, it'll definitely trickle down to the local economy as well, because the US economy on a macro level is connected. So a soft landing, if it doesn't happen, is going to impact the economy overall. And got me thinking, well, what's going on in Canada? Let me research Canada's market. And you don't really see this in the news, but Canada has actually started their recession, or their correction, however you kind of want to look at it. So the housing correction could shave 15% off home prices by the end of 2023. So this is the jargons. I don't know if I pronounced that right or not. I'm not too familiar with Canada. I think that's like their Goldman Sachs, or maybe that's like their Fed. I'm not sure. But now Canada's expecting a 15% drop in their home values. So potentially that could happen here as well. Another one to keep an eye out on is new construction. And there is a lot going on in the new construction world. New construction home sales have the largest share of the market than ever before. So as we can see here per Forbes, they posted an article. 1/3 of the houses for sale are new construction, and that's an all-time high. Now, if we look at this chart here, in 2019, 21% of the houses for sale were new construction. Now, in 2020, it was 25%, and in 2021 of December, 34%. Houston is leading the way by 39.5% of the market share being new construction. And why is this a bad thing? Well, if we're overbuilding, if new construction has the highest share, people were scared to sell their existing houses because, well, there was COVID going on, then the shutdowns happened, and then when everything opened back up, inventory started shrinking because people were scared to sell, the mills stopped making wood prices started skyrocketing, new builds were behind schedule, and then in 2021, everybody was selling their house for record profits, and into 2022, but sellers were scared to sell their house because they're like, okay, I can sell my house, but am I going to be homeless? Am I going to be able to find a house, right? So now that we're shifting away from all of that craziness, we'll see an influx of inventory hitting the market, because now people that were scared to sell because of that, they're thinking about retiring, relocating, upsizing, downsizing. There's going to be an influx of inventory for existing homes, plus all the inventory that we have from new construction. And I'll show charts of why those things can lead to a further shift potentially. As we can see in this article by Fortune, there was a 7% increase in new construction starts from January to February. And if you compare the starts that happened in February of 2022 to February 2021, there was a 22% increase in the starts of new construction. So the builders got overly optimistic. They wanted to take advantage of another great year. Everything was saying that 2022 was going to be good. Nobody was anticipating interest rates to skyrocket the way that they did, and inflation as well, which now has decreased the buyer pool. So from March to the end of May, we actually saw a 43% increase in inventory nationwide. And that's during the purchasing season. So what happens when fall and winter come, and a lot of these new construction houses that are starting right now, that's exactly when they're going to finish, and that will further influx the inventory. Now, we see here in this article released by CNN, there's one more sign that the housing market is cooling off. So in May, there was a drop of 14% in new construction starts, and that was actually down 3.5% from the previous year. So what happened was January, February, March, and April, all of those months saw a decrease in new construction sales simultaneously. Now, in April, it was so bad it was actually double digits, and that's why in May the builders panicked even a little bit more. Now, builders are definitely panicking because they are offering incentives to both realtors and buyers. And if they didn't think that they had an influx of inventory that was going to be hitting the markets, because we know they were selling houses, not all builders, but some, when the house was completed, they'd call up the buyer and say, hey, your house is going to be $50,000 or $100,000 more today than it was when you went under contract. And that buyer would either come up with that money, go up in price, or they would sell it to the next person in line. So if these builders are giving incentives, that's definitely something to keep in mind. Now, I want to show these charts, and these charts we're kind of going to go over everything, and they're going to kind of show us of what's going on. So what happened was in April, we saw that the sales were actually 629,000 units right here. So this is showing May. So in April, it was 629, and that is 200,000 houses less than in April of 2021. Now, an article was just recently released that in May, there was actually a gain of 10% for builders. They actually sold more houses in May than in April by 10%. So that's a positive increase for new construction. However, if we compare that data from May of 2022 to May of 2021, we see that it is still severely lower. So it was 696,000 houses in May of 2022, and in May of 2021, that was 769,000. Another reason why we're seeing these completions and sales ramping up is because the builders are now trying to finish these builds quicker. They're no longer wanting the builds to take a while longer and ask for other buyers if they're willing to pay more. That's one reason. The other reason is there is no more supply chain issue. So if there's no supply chain issue, if wood prices are starting to bottom out, these builders can get these houses done quicker. So a couple of months ago and last year, sometimes it was a cabinet, a stove, or whatever that was delaying a build for 2 to 3 months. I mean, the entire house is pretty much finished, but a builder has to wait just because of a stove, of a cabinet, something very, very small. And we're seeing those homes now probably hitting the market quicker, which sales should start picking up if we're looking at the numbers. But at the same time, all of these permits and all of the starts. So let's look at this chart. We see new construction completion has stayed relatively the same and a little bit higher. Now look at these starts. Starts are way higher and permits are way higher. And all of these starts here are delayed because of the supply chain issues that we had. So all of these houses plus the record starts that we had at the beginning of the year, all of those houses are going to hit the market at the worst time. It's going to be the fall, the winter. Rates are already slowing things down, and that's going to further influx the inventory of homes on the market. So that's why we can definitely see some shifts coming. And I want to show one more thing here, and that is wood. So if we take a look at the wood chart, so we see that wood was always about $400, $500 per 1,000 board feet. Then during the pandemic in 2021, it skyrocketed up above 1,600, and it was going down. They said it wasn't supposed to go down until August of 2022. It actually bottomed out in August of 2021. And then we probably had some price gouging, and there was some political stuff and tariffs on wood, and wood prices started going up, and all of a sudden the market got crazy again, and all the bidding wars came back again at the beginning of 2022. As in the fall, we actually saw a cool down where things were staying on the market longer, and then January kind of wiped all that out. And then right now at the end of May, wood prices did go from 1,200 where they were earlier in 2022 down to 600, and right now in June it's flirting between 550 and 600. So all of that is indicating that new construction is probably going to get cheaper, and the new construction homes are going to cost the builder less money. So if the builder can't get a certain amount of money, they're going to lower their price and lower it further. Plus they have to get this house sold, or else they're out all the other hundreds of thousands of dollars. So they're going to decrease their value, and that can decrease the value of the people that overpaid for their new construction with all the bidding wars. And if new construction is starting to lower their prices, and we see new houses that are existing coming back to the market because now sellers are more comfortable in upsizing, downsizing, relocating, retiring, or whatever, that's going to further change the inventory and further change the shift. Now that's why we can potentially see prices correct 10 to 30%. Subscribe to my video, because next week I'll drop a video of why we could see a crash and what could lead to 30 to 50% decreases, and that one would impact a whole lot more people. So definitely stay tuned. If you have any questions, call me, text me anytime. Like I said, my number will be down below. Leave comments, I'll get to those as well, and thank you for watching.